Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Great you can join us here at AusBiz. Let's take a look at what happened on global markets overnight. And geopolitical tensions continue to weigh on investor sentiment with unfolding political crises in France and South Korea. Well, global equity markets were mixed. On Wall Street, the S&P 500 and Nasdaq again reaching record highs driven by gains in tech stocks. Salesforce was the biggest boost to the Dow, jumping to an all-time high after the enterprise cloud company beat analyst estimates for third quarter revenue and raised the lower end of its annual revenue forecast. Other cloud companies also climbed, including ServiceNow and Datadog. Marvell Technology shares surged to a record high after the chipmaker forecast fourth quarter revenue above analyst estimates. Shares in Atlassian jumped after the company said it signed a multi-year strategic collaboration agreement with Amazon's web services unit. And shares in drug maker Eli Lilly rose after its weight loss drugs topped rival Wegovy in a comparison study. Well, France, the EU's second largest economy, has been plunged into political turmoil after Prime Minister Michel Barnier's government collapsed in a no-confidence motion. Earlier this week, France's borrowing costs briefly exceeded those of Greece. And South Korea's finance ministry has said it's ready to deploy unlimited liquidity into financial markets ahead of the expected ousting of President Yoon. Meanwhile, in the US, Federal Reserve Chair Jerome Powell has said the economy there is stronger than it had appeared in September when the central bank began cutting interest rates, saying the US economy is in very good shape and there's no reason for that not to continue. We can afford to be a little more cautious as we try to find neutral. Meanwhile, ISM data shows US services sector activity slowed in November after posting big gains in recent months, but remained above levels consistent with solid economic growth in the fourth quarter. The survey also revealed that businesses are worried about potential tariffs on imports from President-elect Donald Trump's incoming administration, warning of higher prices. And private sector employment in November rose 146,000, which was slightly less than expected. And the US two-year Treasury yield fell to 4.12%, the 10-year down to 4.18%, and the US dollar index was down around 1/3%, while the South Korean won remains at multi-year lows, and the Aussie is at 64.3 US cents. And Bitcoin has climbed back, well, it was at 99,000, just eased back to 98,500. Investors buoyed by the nomination of Paul Atkins as SEC chair, who is seen as pro-crypto. In terms of commodities, oil futures have fallen nearly 2% as investors await an imminent OPEC Plus decision on production cuts. Brent crude futures at $72 a barrel. The copper was slightly weaker. Iron ore steady at $105 a tonne. And the gold price has edged higher to $2,650 an ounce. All right, let's get across what we're moving at the moment in markets, particularly in the US. Ira Epstein joining us from Linn Associates. Ira, let's start first with those recent comments from Jerome Powell. So seeing that strength in the US economy and saying that they remain flexible, we've heard from a number of Fed speakers over the past week. What do you make of what they're saying and the likelihood of further rate cuts?
Well, the market's got on the CME FedWatch page almost, a 70+ percentile. It's up to 74 today of a rate cut coming mid-December. So that doesn't mean they're right. That's where the swaps market, the betting market is on that right now. I looked at the whole conference. I saw it live with Fed Chair Powell. And the word remarkable is what grabbed me when he said the strength of the U.S. economy. And that word you have to pay attention to is remarkable. Now, one part of you has to say, if we're in such good strength modes, labor, everything else, why are you cutting rates? But then you look under the hood. And if you were to leave a job in America, the average time it takes right now to get another job is up to 15 weeks, not days, 15 weeks. Well, that's just shy of 4 months. So something is going on, and what's going on is the Trump effect. And with the Trump effect, everyone's not certain as to what to do right here. So it's not as though we didn't see the JOLTS data that came out just yesterday come out and show more jobs are being offered. What we're seeing is they're being offered, but the higher rate has slowed down dramatically. Yes, you're seeing some wage gains. They're very minor in scope, but they're there. So how I look at this whole thing right now, it's probably going to hang on Friday's data when we get the U.S. jobs report. If it's a blowout number, blowout being very strong, I think the Fed has a real hard problem of not passing on this month of December. If the number's moderate, I think that they go and then they give you the tone on the conference. They're not going to go every meeting. They're going to slow things down. And that's what we've heard from a number of the Fed members that have been speaking this week. And we pretty much got that out of Powell. You always got to pay attention to Fed speak. And he said they're in no rush. No rush could be every other month. It could be every quarter. The market's only looking for about another full point in cuts. So you can take it slower.
What's the likely scenario then as far as market reaction is concerned? If you had that blowout number for jobs, what would the reaction be, do you think? And also further to that then, Ira, the focus on those dot plots and perhaps if there are less rate cuts priced in than expected. Yeah.
You hit it. I was waiting for you to say that. Good job. Yes, the dot plots will be what we all want to see. I'll be focused on that. But let's assume it is a blowout number. All right, so the market will say, oh, the Fed isn't cutting. And then the other part of you, if you sit back and you think about it, why aren't they cutting? It's because it's so strong. Why are you selling off anything? So you might see at that point interest rates stay stable and the stock market still advance. If the market slows down and the Fed has to cut, believe it or not, that could be the impetus for a short-term break in the market going into the year-end rally. I still believe Santa Powell is going to show up and do things that he has to do. But I think that by the time you and I talk next week, we'll be able to say, at least I'll be able to say, this is what I think should happen and blah, blah, blah. Right now, I'm on the fence post. I'm flipping a coin, and I've been writing that in my newsletter that I don't want to get committed with everybody else. I want to see what happens. And be very frank with you, I've been telling my clients in the stock indices, I've had them in QQQ and the Dow futures, two parts of the market, to lighten up. Let's see what the report comes out. You can always get back in. Lightening up is not getting out. It's just that, lightening up the position there.
All right, okay, so you're always remaining wary, and that's as towards when we head towards the inauguration of Donald Trump and get some more certainty there, you would think. Elsewhere, of course, geopolitical tensions continue to weigh. Should investors be concerned about this, Ira? Perhaps less so in the States, but given what's transpiring in France with the collapse of the government, they've got a debt issue there. Also what we're seeing in South Korea, ongoing military conflicts as well. How does that weigh?
Well, let's first look at France. This has happened before. What will happen is very shortly, President Macron will announce a caretaker, whether it's Mr. Barnier or it's somebody else. I can't answer. He'd be best off with somebody else, so he at least gets into Parliament there. I call it the Congress, into their Parliament, things that can get done up until they can figure out what's going to happen in the government. By law, he cannot call for an election until July because they just had one this past July. So you have to wait a year. So look for a caretaker government. Look, more important, at the euro. It didn't budge. When I tell you it didn't budge, it didn't move 3 ticks off the information. Not 300 points, not 3 cents. It didn't move 3 ticks, and it finished up about 9 ticks on the day. It's a different story in South Korea because now you have a problem. I think a lot of people wanted to see this person Yoon gone. A lot of baggage, not getting things done. Parliament is lined up against him. I would look for impeachment to be very quick and him to be out of office very quick. As for selling off the currency, no. The banks already told you they're going to commit, so you dropped 2.5%, and you almost came back that full amount right away. Yes, the market pressures will take care of it, and that's why I think you've got to get rid of that particular person. So, yes, a change. Not really geopolitical problems. If anything, North Korea is probably happy with this. They might get somebody a little bit friendlier to them, but the democracy is going to stay in place in South Korea. So at the end of the day, a bleep, a man gone, and that's it. Macron will still rule the day until he decides to step down, which at the earliest, if he wants to stay, is 2027. They'll get through this.
Well, I mean, that geopolitical crises are having an effect on commodities. You take a look at gold, of course, but also oil. And that comes, as I mentioned there, that imminent OPEC Plus decision on production cuts. What are your expectations, Ira?
Well, Reuters has talked to sources, and they're saying that for the first quarter of next year, that OPEC wants to stand still. I was very surprised to see the rally that happened yesterday and the day before a little bit. And I think that happened because of China, not because of oil. What I think it was China's going into their closed door meeting now to figure out how they shore up different parts of the economy. They've already had the fiscal and monetary meetings. Now comes and that's what this meeting really is. It's a deployment meeting. So I think that that will come out, and I think that's why you jumped at first in the oil market and stayed up. When I look at OPEC, they're just not going to produce more product out there. President Trump says he's going to have the shale people drill, drill, drill. Don't you buy that for a second. In America, the president can say all he wants. If they're not going to make money at it, they won't do it. So it's a lot of beautiful talk, and it sounds great, but they're not increasing production by throwing out a lot of money out there. It's still a game in America where we're hitting record production off of what we have. We have better technology, our fracking works, and they're not going to put money into long-term vehicles to get that back when after 4 years, we don't know what's going to happen. And sometimes these projects take you a year and a half, 2 years to even get going. Be careful there. Natural gas, a different story. Natural gas, there's so much of it in America, we can go down here. And that's what they'll produce more of. And they'll try to get away from oil and go to natural gas. That's going to be a huge product for America. But as I said, we're at a 6-year high in natural gas stocks. And people I was reading today, they're saying, you got to get bullish, the cold snap in America. They don't look at seasonal charts. Markets typically go down from the very end of November in America right through December on a seasonal basis. That's because you've already put in all that you need, and now you better draw out a lot in order to stabilize prices, otherwise the stocks build.
Ira, great analysis, as usual. Thanks for joining us on Linn Associates.
Thanks for having me.
A quick check of where we're likely to open. Looking for a positive start. SPY futures up 1/5%. Stay with us because we will get across the open in just a couple of minutes.